Alright guys, let me know if I am audible or not. Let me know in the chat box. I think the audio should be pretty loud here because just a second. Alright, I'm audible. Okay, we'll start in like 2 or 5 minutes. Let other people join in. We'll let some more people get in and then we'll start. The latency should be low as well. Let's just wait for 2 minutes. Make sure that you're liking the stream as well. If you're already in, just drop a like on the stream as well. Also, if you have any doubts, you can put it on the chat box as well. Make sure that you like this stream, guys. Make sure that you like this stream as soon as you join in. All right, so okay, give me 1 second. Give me 1 second. All right, let's begin. All right, I will just a second. Okay, this should be better now. Yeah. So, all right. So all the people who are joining in, make sure that you like the stream, and if you have any questions, you can put it on the chat. We will talk about the markets soon as more people get in. We will start talking about the markets. Markets have been pretty good actually. Uh, Small caps have recovered well, but again, um, whenever there's a big fall like this, don't don't get in on the first move up. All right. So a lot of beginners, they'll do this mistake. Whenever there's a big drop, they will start getting in on the first move on the upside. So if you see here, let's look at this base. What is going on in this base? So there's a first drop, which is a big drop. It breaks the EMA as well. I will just darken the EMA as well. Just a second here. All right. So a lot of beginners, they do this mistake. They will get in on the first move back up. Don't do that. All right, because until this high is actually cleared out, you cannot really say if the market is bullish or not. All right, it can basically fall down. It can go back up. and then just fall down again. All right. So until the high is cleared, you cannot say if the market is going to go up or not. But what you can do is you can wait for a dip again, and then if it starts to go up, so after the dip, if it starts to go up again, then maybe you can add more stocks. So we always wait for that second confirmation here. All right, never on the first V-shaped recovery, never ever buy it. You will get caught. Trust me, you'll get caught. So always never on the first recovery. Don't buy it. And obviously, if it's downtrending, then that's a completely different story. I'm talking about an uptrending market on the 1-day time frame. So again, if you see here as well, there's a big breakout here, but what happens? It simply just goes down, right? And then there is a nice recovery here. Then it starts to go up. Again, a pullback, and then starts to go up. So whenever you see that the market is pushing straight up from a fall, just wait it out. Wait for a few, maybe few sessions, or maybe even a few hourly candles as well. You will get your answer. So there is nothing, I mean, saying that the market will simply head higher. It can do that. Obviously, it can do that. For this reason, I'm buying stuff, but with a smaller size. But what will usually happen is there will be a sudden drop and it will start to go up again. Or if it has to push lower and continue the downtrend, that can also happen. But obviously, we are not really talking about that here. All right. So a V-shaped recovery is so basically I'll tell you what a volatility cycle is. So what are we talking about? We're talking about a volatility cycle. All right. So if you see here, the market is not volatile at all. And this is when you will see a lot of different things happening in the market. Some stocks will go up, some stocks won't go up, some sectors will outperform, some won't outperform, some will underperform as well. So a lot of things are going on in the market here. All right. But as soon as such a day happens, you will see that almost all stocks are doing this. All right. So let's take a few random examples. So let's take this one. So if you see again 2 days earlier, same candle here, same candle in this stock, same candle in this stock. So when the volatility starts to kick in, that is when you will see that things are behaving very uniformly. All right. And that is actually good for you because let's say the market is very highly volatile. All right. So listen to this very carefully. Let's say the small cap index is suddenly highly volatile. There's a big drop. All right. So what happens here? All stocks are going down. Some are maybe returning to the demand. Some are doing all. Maybe some are breaking down. Maybe some are falling from a high, right? Because everything was behaving differently before this candle. So as soon as this drop happens, there will be a uniformity across the market, which will prevent you from taking bad trades, if it makes any sense, right? So if the market is falling very sharply, it will prevent you from taking very bad trades because obviously your setup does not include buying straight after a down day, right? So if it includes buying straight after a down day, then I'm not sure what you're really doing. But this is where things will start to differ again. So you see, as soon as this day ended, some stocks went on to make a new high. Some stocks, they have just returned back to the new high or the previous high. You see stocks like these, they just pulled back to the previous demand and now they are making a new high again. So as soon as the volatility is starting to go down, that is when the market is starting to do different things again. Different stocks are starting to do different things, right? Let's say tomorrow again the small cap index does something like this. Maybe a nice little candle right here. So When this happens, you will see most stocks will start to do the same thing. All right. So as soon as the volatility kicks in, it will prevent you from taking bad trades. You might miss out on the immediate up move, which is all right. You don't want to be a part of it because this is an exceptional market. In most markets, this will fail. So, and maybe this fails from here as well. So if you see, we haven't really uh, gone into this, and there is still some supply here. Whereas the other indices are actually moving up. So Nifty, Bank Nifty, they're actually going up, whereas the small cap index is not exactly the best right now. All right, so it might actually come down, right? So make sure that you are always sticking to your setup, because in this kind of a market, if you're not finding a setup that is actually working in your favor, so whenever you're not finding a setup which has been working very fine for you, that is because it is not the market for your setup. That is not because your setup is actually trash. Hopefully this is clear with everyone, right? You are not finding anything because it is not the time for you to trade. It is not because you cannot trade. Hopefully that makes sense to everyone, right? So this is why whenever you're not finding anything good, just stay out, because that is the best indicator. If you're not finding anything, it means that it's not the market for your setup really. All right. Now let's start with the doubts as well. I think Bank Nifty is distributing. What are your views on Bank Nifty? All right, we'll talk about the indices. First of all, how do you think Bank Nifty is distributing? I am not sure what the logic behind distribution is, but it is clearly trending up. So my view in the last video which I posted was I wouldn't take a long immediately. So I think I posted it on this day, right? So my view was that I wouldn't buy a breakout immediately, but I did get into some longs when it formed this base, because if you see on GIF Nifty, this base was actually this one. All right, so this was setting up very nicely, and here the US indices were also setting up pretty nicely. So if you see, this is the time they were on around the demand zones. They were also starting to push up, right? So this was around 13 September, and this is around 13 September as well. So during this time they were setting up nicely. Markets were doing good, and we were obviously leading. Nifty was also stronger than the small caps. So if you see on 13th, the small cap index, before 13th, the small cap index did this. All right, so Nifty was obviously much stronger here, right? So this is where I took longs, but never ever chase a breakout. So this is what I was expecting it to do. I was expecting it to make this range, which did not happen. I also talked about this scenario where it would immediately break out, but that happened, and I did not trade any of it. So firstly, I was actually expecting this to continue on the downside. So let's look at Bank Nifty. So Bank Nifty was kind of weak here around this demand, and I was expecting it to continue on the downside from here on. But obviously then it broke out, and this is where I got in Nifty as well, because Nifty was very strong. All right, this was sort of an intraday trade, maybe a sort of a repair trade for Bank Nifty, but this one right here. All right, so Bank Nifty was actually pushing more during this time, but on the hourly charts, if you see, it was kind of weaker. So this kind of minor differences, they don't really matter all that much. All right, so whenever you are looking at the index, just make sure to first start from the daily demand, daily zones. All right, daily chart basically. So if you see here, where is my last area of demand? And obviously, if you are not aware of what demand zones and supply zones are, I have a video on it. You can go and watch that video as well. It will definitely help you out. But this candle right here is my last demand zone. All right, this candle right here was the last demand zone, and it is still not testing it. So my view was bullish on the markets from here on. I was cautious in the markets when it approached this supply, and the move still hasn't stopped. So this indicates some exceptional strength in the market. All right, and this can carry it upwards for some time. So whenever there is strength in the market, it can simply just keep floating upwards, even though not by a lot. There won't be any big breakout candles where you see like this, because these will usually come out from a high, but the market can stay afloat like this for a long time. So maybe a month or 2 months, market can simply stay afloat without falling. So there is a big difference between distribution and actually some sort of a move lower. So nothing is distributing here. All right, even on intraday there is no distribution, and obviously a lot of you are not good with intraday, which is understandable. Markets are not really conducive for intraday just yet, right? But whenever you're doing intraday, just make sure that you are using your 5-minute zones. All right, maybe 5 minute, maybe 15 minute if that works for you. All right, so let's say the stock and forget about the previous day. All right, just forget about this day, start from the current day. So let's say we are talking about this day right here. All right, which started on 12th September. So when I'm looking at this, the first move is on the downside. All right, so the first move of the day is on the downside. The first move in the first 15-30 minutes, whatever it is towards the downside, and this is my area of supply. All right, so as long as this is holding, I won't really try any longs. Even if the day goes away, index is just sideways, I won't be trying to take longs. Similarly, if you see here, the first move is an up move, so I will try to take some longs during the day. All right, now there will be obviously days when this won't work out, the trend will change. So if you see, the first move is the down move, and here it holds the market for like 30-45 minutes, and then it goes back up. So you can refine your entries on the lower time frame. Maybe even if you take a trade, it's actually good enough for a scalp trade. So here also Banknifty has fallen by like 50 points. All right, so it all depends on you, but stick to the trend of the day. Don't do random things during the intraday. All right, because that is going to hurt you, especially on the days when you can actually trend. Actually, the market is trending. All right, so in the current market, if you see, what was the last area of demand? So this is my last high. So my last area of demand is still here. All right, so the base where the demand the move actually started is actually still inside this area. But if you go and take a long trade here and then you are worried about the market trapping you like this, I think it's your fault, because there was only one long trade and that was somewhere here, maybe a bit lower as well. All right, so even this fall doesn't mean that it will immediately start to fall. It can obviously happen. Whenever I'm talking about the market falling, I am not saying that whatever I'm saying is absolutely right. All right, so I am not talking about that, but I am talking about what is the best risk to reward trade which you can currently get. All right, whatever I say, you look at it in terms of risk to reward. I am not talking about how the market is going to do, but what is the best possible scenario for you to trade in the market, in the current market. So it can fall here, it can maybe come down and then go down again. All these things can happen. But what is the best scenario? You maybe try along around this area. It has entered the base, but obviously the demand is still lower, so it can go up from the base as well. I wouldn't be engaging here as well. Also, make sure that you guys like the stream again if you have not already liked it, because that will also help with the viewership as well. So this is my view on Nifty. Bank Nifty, it is very strongly trending up. There is nothing to worry about. Small cap index might have fallen. It is trying to move down. So let's see what it does around this base. Let's see if it comes down, if it settles in right here. We'll see what happens here. All right. Gujarat Hemis Bio. All right. Let's look at it. What is going on? So this is moving. Okay, this is breaking out now. All right, this is a good move. See, so I talked about this dip as well. It has happened, and it's not some magical trick. All right, it is. It has literally happened 2 times in the range itself. All right, so I'm sure people who are not aware, they will exit on this candle. So hopefully that helped you guys hold on to your positions as well, because this is where the actual demand is coming from. The contraction doesn't mean anything. All right, the contraction doesn't mean anything at all. So the contraction, basically, why do I still use contractions if I'm constantly saying that it does not mean anything to me? See, there is basically one important reason. So whenever a stock comes to the high, all right, whenever there is a move to the previous high, the stock simply cannot break out without taking a pause. All right, it cannot break out without taking a pause. So I am waiting for this phase to get over, so that either there's a shakeout from which I can buy immediately, or there is a nice base from which I can buy. All right, I am not trying to get into a moving stock at once. All right, so the major part is of not buying, of not giving a lot of importance to contractions, is that I'm trying to basically time it better. All right, I'm not trying to stay in the stock for a long time. All right, let's quickly take some questions. Smaller time frames starting to lose the steam. Yeah, because the market, see, again, smaller time frames will work in a volatile area. I've talked about this again and again. I do not do intraday when the market is trending up. You are simply missing out on stocks which are going up. All right, so you can make enormous amounts of money, especially if you have a low capital. Anything below, like maybe even 1 crore, to be honest, you can easily buy stocks and just make a lot of money. You just have to recognize when the market is trying to go down. So when the market is doing this, you simply just wasting time in intraday. All right, uh, because you're paying a lot of brokerage for moves which don't even make sense. All right, to pay a lot of brokerage for something which is moving like this doesn't really make sense to me. All right, so what I'm trying to do is I'm trying to maximize my chances of making money in every market scenario. So where does intraday actually make sense? When the daily candle can look like this. The daily candle won't look like this in the middle of this trend. All right, when a daily candle can look like this on this day itself, I can make 3-4% and be done for the month. I don't have to struggle in the market when it's doing something like this, when I clearly know that the bias is still on the upside. All right, so don't blindly just do intraday. So people, when I was obviously learning how to trade, there were a lot of people who would simply just tell me to they would tell me to not do intraday every single day, which is a good advice. I'm not trying to say that it is a bad advice, but how do I know when I should be doing intraday? I mean, how do you actually know when you should do intraday? You do not know. All right, so to figure that out, you have to spend some time in the market. You have to wait for these kinds of downtrending markets. See, this was an amazing time to do intraday. Anyone who did intraday from January to March, they know how easy it was. All right, I've done it myself. You will literally you were taking a shot every single day in March, and every single day it was working out. That was the market in March. All right, you didn't have to think twice before taking a short trade. All right, so if you see here, see, you are shorting here, maybe at some supply. This is working out. This is working out a short from the highs. This is falling all day. This is working out. This short is working out. This short is also working out. All right, the multiple shorts working out here. Again, this short is working out. So every single day you come in the market, you wait for a zone, you take a short trade, and you make your money. This was the condition in March. All right. From April, things really changed. All right, you see much smaller candles. You see the range here, and then you see the ranges here. All right, pretty small. Things changed because the market started to go up. So that is when I started to buy stocks. So not very difficult at all. This is where I started. This is where I completely shifted from intraday to taking swings. This candle right here. All right. So there is a market for everything. Do not just do intraday in every single market. You won't make money. Even if you do money, even if you do make money, it won't be something which is very easy for you. All right. So let's take some more questions. We'll take the stock questions soon, but again, make sure that if you just joined, that you like the stream as well and share it with other people as well. All right. Let's look at ONGC. So I might have to skip a few questions because I usually tend to take a lot of time and I talk about 10 things while answering one question. So might have to skip a few questions to continue with the stream. All right. So make sure that you just ask it again if your question gets skipped. ONGC is already moved. There is no entry. See, again, you want to enter around the DMA. All right. Maybe even here. So right now here, don't buy it. Right. Do not buy it. Just let it go. You will be better off letting it go, because this kind of a momentum phase, it will only start from a base, and if you try to enter in the middle of a momentum phase, you're basically guessing it. You're guessing how much the stock can go up. You have no proof that since there is a base, the stock will go up. When you are buying, it's already very far from the base, so there is no point buying it here. Aditya Billore, all right, I'll get back to your message. If you have sent it, I will check it out. Don't worry. It might have gotten skipped. Don't worry, I'll check it out. All right, Metro Brands. Okay, Metro Brands. It looks all right. It looks all right. So I think, okay, what is this? This is interesting. So I think someone asked about it on this day. If we held a live on this day, I'm not sure. Or maybe someone in the server asked about it, and this was the view on the chart on the stock. So what was the view? You dip down, you make a swing, and then maybe you start to go up. And this is exactly how it's playing out. So you have to recognize these things before they actually happen. All right. So whenever this, so it is too extended, comes back here, and then it starts to go back up. All right. So make sure that you are aware about when these stocks are actually extended. Tata Consumer is gone. All right. Just a second. Tata Consumer is also extended, so you might have bought it, I guess on this day maybe. Even this is kind of extended for me because demand is right here. So I want it to actually pierce to the demand and then try to take off from the demand itself. All right. So if we look for an example, okay, this is a very slow FMCG stock. So let's look at it. Look at an example in another stock. Let's look at this one. So if you see here, this is my area of demand. Goes deep into the demand, into this candle right here, and this is where I bought it, right here on this candle. All right. So I want it to take off from the demand itself. Otherwise, I could have bought it here as well, which is not a good trade. All right, because it buys. Okay, just a second. All right, give me 1 second. I think there is some problem with the internet. Give me 1 second. All right, we should be good to go now. We should be good to go now. Let's resume with what we're talking about. So yeah, so you see it goes down into this area of demand and then it starts to push up. All right, so this is what we are exactly looking for. Do not buy stocks which are contracting but they're hovering in the middle of nowhere. So if the stock is just in the middle of nowhere, it's going up like this, maybe pulling back and then maybe just consolidating here, don't buy this. This is not worth it. All right, so whenever you're buying a stock, make sure that it is actually pushing off from a demand zone. But again, there can be quite a few structures which happen in this area. All right, because it is not necessary that it will go up. If it goes into demand, it will just go up. It has to be, the range has to be pretty small. All right, so for this, the entire range should be contracting. So you see, as you keep putting in more variables, your trading basically gets better. But after a point, these variables will start to be counterproductive. So let's take an example for this as well. We'll talk about it out soon enough. Don't worry. So what happens is, let's say you are planning to buy a stock from the demand zone. Okay, that's good. Then you see that whenever you're buying a stock, it's going up, but it's again rejecting from the supply and coming back to your cost. So you want to get rid of this as well. So you add another variable that I will wait for the test of supply. All right. So whenever a variable is added to your trading system, you will miss out on something else. So if you are waiting for this, you will miss out on stocks which move up straight from the demand. Now, how do you know if you want to do this or not? How do you know if you want to miss out on the move or not? You want to be watching this in multiple stocks. All right, you want to see if this is going up more often or if it's pulling back more often, or in what market condition is it going up more and pulling back less, right? So then you have a condition when you want to add this variable in your trading. All right, now let's say you added this variable. All right, and now there are two variables. You are looking at two conditions basically. You're looking at but I'm calling this a variable because it can vary with the stock chart. All right, it's not a fixed rule. All right, supply can vary. There's a lot of things which can go on even inside this structure. So let's say you're looking at this. All right, now it comes down and then it goes back up again. All right, so when this is happening, if you are waiting for it to go back up again, that is the third condition. All right, so that is the third condition because you are basically hoping that supply will be taken out by this demand. Since I'm looking for a long, this is some sort of a confirmation that stock can go up. All right, so let's say this is your trading system. You will start to buy as soon as there is a higher low which is being made. So this is the first low, this is the higher low. So let's say you are trying to buy off of this higher low. Now when you're trying to buy off of this higher low, remember that you are waiting for some time for this to form. All right, so for your third condition, you have to wait for some time. So if the market is very bullish, you will see that this structure, this second part, is not exactly happening very often, and stocks are just taking off from here itself. Or if the market is pulling back from some sort of a deep correction. So recently, if you see, the small cap index has gone up, right? It did push down and then went up. So you see a lot of stocks, they simply just broke out after this low, right? So that might fall into your trading system. You might have made the money of your year in the last 3 days, because look at the stocks which have gone up, right? All of them are moving straight from the demand zone. Look at this stock. All right, look at this stock right here. So you might have made like 7-8% of your portfolio just in the last 2 days. But does it work in every market? No. So what happens? You pull back, you go up, you come back down, then you form a bigger range, right? So every time you add a new variable, there will be a few things which are also gone from your system. All right. So over time, you will have to figure out whether I have to include this or whether what do I have to do with this, or do I completely ignore such structures, because I have not bought a single trade which looks like this in the past 2 days, even though there were hundreds of opportunities, and even though I knew that this will happen, because this always does happen. Whenever there's a sharp pullback in the market, some or the other stocks, they will immediately on the next day bounce from the 50 EMA or something. All right. So let's take an example of 2021. So let's look at this correction right here. This is from August to basically beginning of August. Let's pick a random stock. All right, 2021 beginning of August. Okay, this is not uptrending. All right. Right, so look at this one. So this is the time, beginning of August, this correction right here, and it immediately goes up. Right, some stocks have also broken out. Obviously, you can find those stocks if you have if you are going to backtest, but you look at this correction, immediately went up. But what happened again? The market basically continued lower and this went down again. And then it started to basically range out. So I know this entire cycle, I've been through this multiple times, so I know this can happen. So I don't want to risk money in small caps trying to buy something directly from a low. All right. So currently, if you see, the small cap index is pushing lower again. This is what I was talking about in the beginning of the session as well. There is no confirmation yet. We have to wait for the demand zone. All right. Do not get in straight away. So over time, you will have to see these things. You will have to basically, you will have to make your own rules. Even if I can teach you all this, you will have to spend time in the server to learn all this. All right. You take the mentorship, you attend all the sessions. That does not mean that now you can trade by your own. You have to engage with the market very, very consistently. All right. And I think this might have happened with a lot of people in 2021 who were with me in 2021, because there was nothing wrong in the market at all here. All right. Basically, the bad stuff started in October 2021. All right. So this is where I started teaching, and this is where the bad stuff started to happen. So for people who were with me before this, kind of might have struggled here, all right, or maybe here as well. But obviously, you will get better with time. The only thing is you have to keep going at it consistently. All right. So let's look at a few doubts now. Let's look at Senco Gold, because in every live there are 5 people who ask about it. So all right, it has gone up. Very unluckily, it has gone up. So what was the view in Senco Gold? You are holding from 410. Okay. So if you bought yesterday, that is an okay trade. I won't say this is a great trade, because you simply ignored all the supply here, which is all right. These things happen in IPOs. But what I was waiting for was, let's just replay it back. I was waiting for a range like this. So again, the same thing comes into question. Am I willing to miss out on a breakout here? Absolutely yes. All right. I am willing to miss out on the breakout just to get a proper base right here. And what does it help with? Why does it help me? It helps me with, let's say there is a range and then there is a breakout. Now, just after my breakout, there is a very sharp correction in the market. So let's say there is a breakout here. There is a very sharp correction in the market. Now my entry will become the demand zone because it was a range before. All right. And this is the key insight for what I do. The entry will become the demand itself. And as soon as the stock comes back, there is a chance it will go back up. All right. And it has happened with multiple stocks which I own. So if you see this stock right here, I have squared it off, but we will talk about it. My entry was here. All right, there was a breakout. Obviously, I was buying it from the demand zone. The audio is getting stuck. All right, just a second. Is it okay with everyone? The audio, hopefully it should be okay. Just let me know in the chat box if it's okay or not. All right, it's fine. All right. So what happens when it pulls back down to the demand? So my entry after the breakout, my entry became the demand zone. All right. So this is what happens. It came back up to the highest profit. All right. So this is the key advantage which I have. Let's take another example. Okay, let's see this stock right here. So what happened? I bought this stock. I was looking to buy. I did not buy this, but I was looking to buy this stock off of this move. All right, somewhere maybe here. So what happened when it pulled back from the supply? Let's look at the replay. What happened when this candle shaped up? I did not exit my position because I wouldn't have exited. So I did not buy this. I'm just talking about what would have happened if I bought this. So I did not exit my position here. I would not have exited because I know this is a demand zone. So there's a chance tomorrow this thing simply does something like this. All right. This would just break out. And what happened next? It basically came all the way up again. If you see the wick here, it came up again. Obviously, next day market dropped on 12th. Market there was a big drop, so I would have exited this anyway. But it gives me a second chance. All right, it gives me a second chance to stay in the stock. If you are buying the breakout, that chance is gone. If you're buying here, you are in pain when the stock is doing this. All right, you are in a lot of pain, and that is a fact. All right, because I've been there. Every stock you buy, 8 out of 10 stocks are here as soon as you buy them. All right, so something's wrong. Something's inherently wrong with this, especially in a bad market. I'm not sure how people are dealing with bad markets, or I mean, what is really going on for people who are buying breakouts? Because if they're actually making money doing that, that is actually extremely impressive. Because I would fold in like 1 month if I'm told to buy money only from breakouts. All right, so this is what I'm trying to do. I'm trying to buy just before the breakout, looking at other factors, looking at the demand zones, looking at the weekly charts, looking at the sectors, looking at a lot of stuff. All right, I'm trying to buy before it goes south, before it goes even north actually. So all right, SBI Life. I talked about SBI Life earlier in the last live. I told you guys that this is the best insurance stock, strongest one. Whenever it breaks out, it will break out big. So it is going up. So I guess it if you've already bought it, that is a fairly decent trade. But don't buy it here, because again the demand zone is here. This is the last high. So if you're buying here, look at what can happen to you. All right. So SBI Life, not anymore, but obviously it was a good one if you already bought it. All right, Tata Investment. All right, what's wrong with Tata Investment? Tata Investment is just sideways. The demand zone is right here. It is trying to hold it. It is reacting badly from the supply also because the market is also moving down here. Let's see what happens. It is bullish for me, obviously. It can even break out. It is also at the weekly demand. All right, how do you find stocks for swings? You might want to visit my Instagram for that, because I have posted like many posts over the past 2-3 years. You can find a lot of stuff there. It will be a very long live if I start discussing those. Right. Karur Vaisya Bank. Alright, it's broken out today. Unfortunately, I was out here, which was a very rookie mistake. I was holding it from this base. So I was out here because I was preparing myself for a continuation into this base, which is alright. But as soon as I exited that, I also bought this. So I guess it covers up, right? Anyway, it is gone now. My entries, I've already talked about it multiple times. I have bought this stock here and here, and I exited just above my cost. So that is some sort of a bummer. All right, Bajaj Auto. Bajaj Auto again. Let's look at how it moves. Let's look at how it moves in the past. Let's see where all the big moves have started. From the EMA here, from the EMA here, from the EMA, from the EMA here, and again from the EMA here. It is basically moving from the EMA again and again. And this is what basically all stocks do. So don't buy it right now. All right. It is gone. And probably there is some news in Bajaj Auto or something. It does not move 5% without some sort of news, is what I have seen in the stock. So it's gone now. Forget about it. Macrotech is also gone. And there was no entry in Macrotech. I don't like buying stocks which are moving out from a structure like this. There is just multiple levels of supply here. 1, 2, 3. All right. I was actually okay. So nothing here. Let it go. All right. So Tata Motors looks good. All right. Tata Motors looks good. Tata Motors is actually quite extended. So it is actually extended. Don't buy this. So if you see on the hourly, you can see the base very, very well. You want to see. Okay, let's talk about it. Then we'll end the live as well. Very important thing actually. Let's say we have a base here. All right, listen to this very carefully. It is more important than your stock doubts, and I'm sure you will realize it after it's over. Let's say there is a base here and the stock is breaking out. All right. So it is breaking out. So what is happening here? Let's just look at it. It's breaking out. Now this base is, let's say, 4% wide. I'm talking about a normal small cap. It will be 4%. So the stock slowly pulls back up, and what you see is there is a wick poking out here. All right, maybe multiple wicks which are poking out towards the highs, and obviously these wicks have bodies inside the range. All right, so you see that it's fairly close to the demand zone. Maybe some demand here. It's fairly close here, and it is reacting from the wick itself, and you will be tempted to buy in here. All right, you are tempted to buy in here. Now look at the difference. Now this versus if you are just waiting for the stock to go deep into the range and then buying off of this low right here. So your initial entry was somewhere here and your proper entry is somewhere here. All right, so how much difference does it make? So let's do some proportion stuff. Okay, give me 1 second, because I don't have price reference. Let's say this is 4%. All right, so the difference between your entry and exits is also 4%. All right, so basically if your stop loss is here, this entry is 8% above your cost, above your stop loss, and this is basically 4% above your stop loss. So this is a direct 2x difference in your risk to reward if you are taking the trade. So to make 2x, to make 1 hour here, the stock has to move 8% from here. All right, so the stock has to move this much from your entry. If you have to make 1 hour, just 1 hour, just 1:1, and if the stock moves this much from your entry here, which is basically 4% from your initial entry, so 0.5 hour on your initial entry is equal to 2 hour on your proper entry, just a bit deeper, nothing too much, just a bit of patience. So basically a 4x difference. All right, this right here will keep adding up over time, and you will make much less money than you could have made. All right, hopefully this is clear with everyone. With this, we will end the live here, and I will see you guys again in the next one. All right, if you have any doubts, you can leave it in the comments in the video, and anything about the mentorship, you can hit me up on Instagram. Have a nice weekend, everyone.